Hello to us everyone and welcome to our new video for the end of the week. Actually, again, it will be just kind of a review of what's going on ahead of webinar that will be on Monday. So make sure to be with us on Monday at 15 Central European time. So what's going on? As you know, dollar has been on the move. It's actually been on the rise for some time now. We identified and we tracked this ending diagonal, even highlighted it in our members updates as well as in webinar that we are looking for a reversal for limited downside on the dollar because we know that this is a very strong, very powerful pattern. And what we are seeing is actually very textbook stuff, very sharp, strong move out of this wedge, fully retraced. And what's the most important right now is that this move is looking impulsive. We are not seeing pre-waves up. So it means that there's plenty of room for dollar index to recover further, especially after this wave B retracement. Now, why we are seeing this kind of a reaction, as you know, non-farm payrolls report today, jobs data came out very strong. So it looks like that market has to reprice some of the cuts expectations. As you know, because of Fed cuts expectations, dollar has been moving sharply to the downside with US yields, but looks like that now maybe if everything is great, maybe so many cuts are not needed, and that's why dollar is coming to the upside. Now, what would be the levels that I would pay attention on would most likely up to this 104, 103.60 area. So let's see what happens up there. If that resistance is broken around the 61.8%, then we will go even higher or maybe stay in a very big triangle range. But if we'll see free wave rise into that area and then we sell off, then we will again turn bearish. But for now, it looks like that the dollar recovery has room for further upside. Also, what's been moving this week is pound. Now, pound is moving sharply to the downside, also breaking this wedge trendline support. It came to the downside based on those dovish comments from some central bank members in the UK. So this makes pair very bearish because again we have this impulsive sell-off. So even if that's wave A of a higher degree, wave for correction, be aware of more weakness. Now, of course, now it can be a bit too late to look for potential shorts here because you can be in very late stages of this first impulsive wave A. So what you want to see, most likely wave B rally, which could possibly find a resistance around the previous swing high here at 132.60. So my view will be for more weakness after the next bounce as long the market trades below this 134.40 highs. Okay, so these are the structures and patterns that appears to be very clear in the market, and that's definitely the structure I want to pay attention on if I want to look for potential trade setups. Also, what's very important is, as you know, crude oil. Crude oil has seen a significant move to the upside this week or in the last 2 weeks, and I'm very curious to see what will happen with crude oil. If geopolitical issues remains, then of course this is bullish for crude oil. If crude oil prices will move to the upside, then we know that this can be again issue because of inflation can move to the upside, and this means that dollar could see more gains as well because US yields will go too far. So this is something that we have to keep an eye on because I think that crude oil could tell us a lot what will happen with the dollar based on inflation expectations. Now, from all of them, what I really like is gold. Now, metals are still doing well despite this very strong move to the upside on the dollar. We are seeing gold quite stable, right? And also, what's interesting or what's important is that geopolitical issues remains. That's bullish for gold. And even if dollar, which by the way has seen a pretty strong move to the upside, will see some retracement, which I believe will happen, then of course this again could be supportive for gold. So as soon as dollar finds maybe just temporary resistance, I think that gold will see much more upside. But I'm still watching this support area around 2600, 2620. That's the perfect zone, textbook zone for the bounce of this fourth wave support into up into the fifth wave. So definitely I will have eye on this one. Also, what's interesting are stocks. Stocks are doing quite well. I mean, and the reason why they are doing well, if data shows in the US that economy is doing well, then of course stocks are doing fine. But what's interesting is that dollar is coming to the upside, but stocks not seeing any kind of a big drop. Maybe we will see some retracements in the short term, but maybe if we focus on the next few weeks, I just still think that after the next potential dip, we will see more upside on stocks. Looking at some of the single stocks, as you know, we covered them on in our webinar on Monday as well. So make sure to be with us, and we will do it obviously again in our next session. And what I want to look at right now is Nvidia. As you know, Nvidia has been the main driver of technology sector the last year or so. And if we look at this pattern, where to me it looks like an ongoing triangle, or maybe we're very closely to complete the pattern, and it's a bullish pattern, it's a continuation pattern. So if we can break next week and maybe see a close around 130 or higher, I think that this will push prices even higher here on Nvidia, and this could make quite attractive maybe potential setups on some of technology sectors or single stocks. But of course I will keep a very close eye on Nvidia. If suddenly, let's say that this trend line resistance will limit the upside for the near term, then watch for the supports here still around 110. That would be obviously the textbook support for this wave E. But overall, I just think that sooner or later we will see more upside. But as I said, maybe in the short term we could see some setbacks on indexes, especially if dollar will keep moving to the upside. The real question is how long can these stocks can really handle strong US dollar. So if we see some pullbacks on the intraday basis, still find just better levels maybe for some of the stocks to be long. Traders, thank you very much for your attention. I hope that you enjoyed this video. Please make sure to subscribe to our channel, to press a like, and if you're interested in more of these analysis, we have a special offer going on. Get the 2 months for the price of one for new members. So if you're not our member yet, or maybe if you just only tried a trial, then make sure to check this offer, and hope to see you soon.